Hello, I hope this message finds you doing well. We are in the process of continuing to answer the questions you fed us over the course of the last few weeks. Today, I'm specifically addressing the question about what sectors of the markets we think are going to benefit coming out of the recent correction, and more specifically, I think COVID-19, life after COVID-19. So as an example of the questions that you fed us, one, what sectors of the U.S. economy, in our view, will flourish once COVID-19 becomes a part of our everyday life? Another question that's similar, in the new normal, whatever that is going to be, will cause changes. Different companies in the future than the traditional ones will do better than others. How will you determine the most likely success stories? And then there's one that used a phrase from Governor Cuomo, the governor of New York State, that says there will be a period of reimagining our economy, and what will that involve, I should say. So I'm going to try to address that today, and by doing so, kind of talk about a number of things that we think we're already doing, and how that'll play out in the marketplace. So the reality is, as an investor, we're always looking for what are the things that are going to happen in the marketplace that we can take advantage of. So, for instance, with the recent correction in the market going back to late March, we've made some changes in the portfolio that have already started to benefit. So, for instance, in early April, we started to buy some energy stocks in the energy ETFs. Those are up pretty significantly off the bottom. A recent graph by Ned Davis Research showed us that those stocks were up about 65% from the bottom, but yet are still down almost 40% from where they were a year ago. So we bought those early, and there's still a lot of room for those stocks to run. We've had financials and industrials, which have been something we've purchased more recently. They're up off the bottom, around 25% or so, but still, around 15% below their all-time highs. Now you compare that to technology, which is up about 25% off the bottom, but now is still, they're 22% higher than they were a year ago. So the technology stocks have fared very well in this. But are they getting to the point where that run may be coming to an end? Again, we still own a number of them. We're not suggesting that that's over with, but what you are watching for is, do we start to see a rotation? All right, so probably the biggest thing we're watching for in the markets is, are we going to see an end of this period of growth outperformance? We're now into one of the longest periods of time where growth has outperformed value. To the largest extent it's ever outperformed value. So are we going to see a rotation out of that? Again, it's very early in that process. It's too hard to tell, but it'll be something that we're watching for. And there are reasons why that event may start to happen. Some related to valuation, some related to different things that may go on in the economy. As an example of what may go on in the economy is, will we see a rebirth of manufacturing in the United States? If we go back to just a month and a half, 2 months ago, one of the biggest headlines out there was hospitals, places that were on the front lines of treating COVID patients, were unable to get protective equipment. A lot of that equipment was being produced overseas and is being produced in China, and we couldn't get our hands on equipment here. In addition, you had various medications that they were looking for that were being made, and many of them being made in India. And India was, at least temporarily, putting a ban on exporting some of those drugs to the United States. We solved that problem very quickly, but will we see a resurgence in U.S. manufacturing because instead of our just-in-time inventory solution that we've had for the last 25 years going on in the United States, will we have a just-in-case inventory situation where we start to build stockpiles of these things and maybe do so with some U.S. manufacturing? Again, that's not happening today, but it's possible that we do start to have that. What's the argument against that? The argument against that is that if we manufacture those things here, our cost of labor is higher, therefore the price of those products will be higher. And will the U.S. consumer, will U.S. businesses, will the hospitals be willing to pay that price? We don't know the answer, but it is certainly one of those things we're going to be watching for. The other thing is, are we going to have, inflation or deflation longer term from this event? You have a couple things on the inflation side, which is one, you have a lot of money has been pumped in by the U.S. government into the economy. Stimulus checks were sent out. The data is suggesting that a lot of that stimulus money is being spent. You've had money being printed to help support U.S. companies. PPP, the payroll protection program, is probably the one that people have heard about the most, where small businesses were able to tap into a loan program to help them cover their payroll. Far from a perfect program, but the idea was the government's getting money out there to help small businesses, and that money is circulating around and being used in the economy. And does that eventually lead to inflation? Because the government has literally printed $3 trillion of new dollars to get out into the economy to help support it. So that could, trigger inflation. The other thing that could trigger inflation that probably doesn't get talked about as much is if we have a lot of companies go out of business because they haven't been able to survive the shutdown, and that leaves fewer competitors in place, the companies that survive may have some pricing power, and they may need to drive up prices to, support they have less competition. They need to, make back the profits, or I don't want to say necessarily just make back the profits, but they have to replenish their cupboard, so to speak, and they have some pricing power because there's not much competition out there. So there's a couple things on the inflation side, but you also have the deflationary side that could still stick around for a period of time. Unemployment in a lot of states is, well into the double digits right now. The hope is that number will come down significantly as the economy reopens, but it's quite possible that doesn't happen. And if that doesn't happen, and you have a massive fall off longer term in consumer demand, does it lead to deflation instead of inflation? So again, we don't know how any of that is going to play out yet. Anybody that's looking at that is really just, at this point, speculating on what they think is going to happen. You certainly can make arguments for both sides and make very smart arguments for both sides. But we'll let that kind of play out. And what we'll really do is look at any given point in time, where can we, find value? Where can we find businesses that are generating cash flow and buy them at cheap prices? The other thing that could really also play into, what happens coming out of this is, changes in society. Does a company come up with a vaccine? So far, there's been a couple of companies that have been close, but at this stage of the game, nobody has the vaccine, so to speak. When a company identifies itself as having a good possibility and is entering tests, it certainly props up their stock and has done well. A couple weeks back, we had Moderna was the name of the company, I believe, that showed very promising results. But since then, people are starting to call into question whether those results were as good as identified. Then you have other businesses that may do well. If we're going to have a massive work from home revolution, does that help some technology companies? Quite possibly. But does it also hurt some real estate? It might hurt real estate in some of the bigger cities where the cost of living is high. If people can work from home, do they move to other areas? And it might hurt real estate in big cities, but help real estate somewhere else if people decide they're going to move to more urban or rural areas where housing is cheaper and cost of living is cheaper. So there's a lot of things that can happen. The bottom line is, from our perspective, right now we're focused on things that we view as being relatively inexpensive, that we can buy at good values, that we're starting to see some good momentum come back to in the marketplace. Longer term, as changes are made, that'll affect and impact different industries. So I answered this question today. There's a bigger question that we also got that we're going to address in a separate video. And that's really about, what do we have to do from a longer term asset allocation standpoint? There are some changes that are taking place in the world today that will impact asset allocation recommendations we're going to make going forward. And again, that will be addressed. A number of you, it's probably the question that we were asked the most. A number of you asked that question. We're going to address that separately in another video. So hopefully this helps. Thank you very much for watching. And any more questions, feel free, please reach out to us.